Good evening, everybody, and Happy New Year. This is Andy Pedraza with Special Effects Academy, and we're on our start of the week, start of the month, start of the year session for January 5th of 20 in the Forex trading room. Thanks for joining us today. As usual, we'll go into our standard agenda. Still looking at the prior week. That's probably a misnomer. We'll be looking at the prior 3 weeks, I think, is the last time we had a session. We took a couple of weeks off for end of the year. We'll be looking at our currency strength meter for the past week and past month, fundamental announcements on the calendar for this coming week, a look at the pairs, major pairs on the daily charts, any setups we see in progress, and a few words in conclusion. We had a pretty good month across board on the different accounts, and we did do trading even while we were off. So specifically on the long-term account, our second we're going to be looking at that chart a little bit later in this deck, but we did take another 200 pips out of the Euro New Zealand after having taken 200 pips in our first of our recent entries into that pair. So we're up 400 pips on that one pair. And we also entered a short on the pound Canadian on early in the year. So on the second and well, it is at profit. So we're carrying a little bit of open profit there on that trade. For the interest, little bit of movement, a lot of movement. The 1 week in, and that was not reported, or at least was not reported in a deck because we took the couple of weeks off. But we did clear about 1,200 pips net on the 1 week, thanks to the pound after it started retracing. So we took some profit out of that. We re-entered a few trades. We are carrying open profit on the trades that are remaining, I think 6 of them at this point. We're carrying about 300 pips of open profit on this account as well. So all in all, it was a spectacular December, spectacular end for the calendar year. And of course, we'll just continue doing what we've been doing. On the short-term account, trades in the past couple of weeks, so there is nothing to report. The ledgers are all up to date, so if anybody wants to look at the ledgers, everything was pretty much recorded in real time, even though we were off for the few weeks there. So the ledgers are up to date, and we're always up to date if anybody has been looking at them. If not, you can take a look there and see exactly what individual trades were taken and closed in these intervening weeks. Notice an opportunity for, as I said, was a spectacular couple of weeks in November that gave us an early Christmas. It itself gave us a net 1,200 plus pip week on the intermediate term account as the pound crashed. Open profit is still being carried on intermediate and long-term accounts. We will be applying new parameters for the short-term trading for this last quarter of our fiscal year. Our fiscal year starts in April, so then to March fiscal year 2019. It's not the same as the calendar year. So we're 9 months into our trading on all 3 accounts. We've got 3 months left, and we will be changing the parameters for the short term as we go into a little bit of recovery mode. That's the only negative account out of the 3 of them, or significantly negative account. Obviously, Happy New Year to everyone. We're glad to be back. And as a reminder, for our live, it says next year. That's wrong. Obviously, it is now this year. We're going to be doing that April 29th, 30th, and May 1st in Wilkes-Barre, Pennsylvania. All the details are on the website. We do hope to see you all there. And, well, that's it on our notes and opportunities. Let's take a look at our strength meter for the past 30 days and the past week. Let's start with the past 30 days. Obviously, lots of movement as the pound crashed. We can see that on the monthly, the pound is the overall loser, followed by the dollar, and the clear winners have been the metals, gold and silver. In times of uncertainty, people tend to park their money in a safe spot. Money is never safe. Money is fiat these days. It's just pieces of paper a government prints without anything real backing them. So when people get nervous, the money starts flowing into silver or gold, and that's what we have seen happening in the last 30 days and even in the last week if we shift to the other chart. So silver and gold have gotten a nice little boost. Obviously, at this point, everybody is aware of the attack that the U.S. carried out on one of the top military leaders in Iran. He was in Iraq for whatever reason and got blown to smithereens. I'm not going to be commenting on the politics, right or wrong, of the event, but I will be commenting on what it means for the market. Oil spiked on that news, and of course, there is a lot of uncertainty in the Middle East right now as a result of that action. So oil has gone up to very close to its most recent high. It's within a couple of dollars of hitting it. And if we see Iran attacking any of the U.S. interest or Saudi interest in the region, we may see oil go even higher. So that is probably the news event of the month. And we'll be very eagerly looking at what oil does, since it will have an effect on at least one currency that we track, the Canadian dollar. So we'll see how that plays out. Continuing to look at the monthlies, as I said, the pound and the dollar were the worst hit, followed by the Japanese yen. And then we have the Canadian and the Swiss probably had the best showings of any of the currencies. Australia and the euro were pretty middle of the pack. Australia is having its own problems right now, as pretty much the entire freaking continent is on fire right now. Hopefully you've seen the news and followed it. I'm still waiting to see a clear effect on the Australian dollar. This could go either way. If we see it as a devastation of the Australian economy, obviously the Australian dollar will go lower. But at the same time, when we have a major disaster like this one, the investment that's going to be required to rebuild will actually have the opposite effect. It will make the Australian dollar, or could make the Australian dollar stronger. So the jury is still out. This could go either way. I'm waiting to see a clear reaction from the Australian pairs before we jump into anything. Focus will continue to be on the pound. Brexit is still scheduled for end of the month, and I think the pound has quite a lot of room to drop before everything is said and done. I don't think the pound is going to stay at the bottom too long. It is the uncertainty and the hype that is moving it. Once we put Brexit behind us, and whatever happens, I think we'll see some stability returning into the pound, and then we'll have the opportunity to trade it back up, probably somewhere into the 140 region, which is a nice 1,000+ pips. So we're going to end up making this money both ways. We've been making it as it's gone down. We've made it when it went up. We've made it again when it goes down. We'll continue repeating that. We're not tied or married to any given currency. We don't care where a currency is going in the very, very long run. We care about the movements that it makes all the way along the way. And we don't care if we're long or short the pound, so long as it's making us money. So that will always be our philosophy, and that should be the philosophy of any trader. Don't get married to an idea. Don't get married to a concept. Get married to the idea of making money. That's all you need now. Moving on to the weekly strength meter, we can see that the Australian was pretty hard hit. So was the Kiwi. The pound actually didn't have too bad of a showing, but it still dropped, and it's still dropping right now. Market is already open, and the the pound continues to drop. Canadian has been looking pretty good, and we've seen some strength come back to it. The Swiss has been going in both directions, but again, this week of the year was guaranteed to be fairly quiet. A lot of traders took time off. I took time off, though I never took the hand off the wheel for too long. I was still checking and trading. But again, not a whole lot of significant movement for the week, other than with the metals. Gold was the very clear mover. You can see how dark that column, the last one, XAU, is. That is gold, and it outperformed everything else out there, followed by silver. So most of that 3.45% is attributable to bullion and not to the currencies per se. But still, that's what happened for the week. Now, our calendar, this is the first week of the month, so we will be having our non-farm payroll on Friday out of the U.S., and also the Canadian employment numbers at the exact same time. So we will be trading both of these events on Friday. There's nothing else significant on the calendar. It's going to be a quiet week from a fundamental announcement perspective. And with that, we move into the charts, starting with oil. You can see that huge spike on Friday, and you can see how it broke past the prior level of resistance at the 63.84, a little bit shy of 64. I think oil actually hit 64 before it started dropping again towards the end of the day. Still, it's in a uptrend. It's broken past almost all the previous highs, except the ones at the very beginning of the chart back in April of 2019, which again, the start of our fiscal year by pure coincidence. But that's when oil peaked, and then it dropped all the way to the bottom in June, and since then has been bouncing in both directions. It looks like global events have finally woken it up to the point that it may break the prior high at the 66.65. We'll be looking at next week or the next couple of weeks events to see if that's going to be happening. I am trading oil options, oil futures. I regularly do that, so I'm doing quite well right now with those. But obviously, I'm more interested in a longer-term move, breaking out of what is a very wide but still a sideways channel. So we'll see if it does have the strength to break, or if things calm down and we get a trip all the way back to the bottom. And with that, we'll move into the currency. So we had the euro crest last week and then start heading down. I think we jumped on this one, and we are carrying a little bit of open profit on the euro dollar yet again. We've been trying to catch the break. It hasn't quite broken the trend line yet, but there's probably a good opportunity for us to continue trading it down. Again, open trade, we'll be managing that one and seeing what it does for us. Pound dollar, the way back bottom of that rising channel, still need a definitive break of that bottom so we can start trading it down. The problem is that uncertainty is hitting the pound and also hitting the dollar. So this one has been overall very reluctant to break that support level at the 130. It broke it momentarily a couple of weeks back, and boy, did we make profit on that one. It then popped back up. And right now we're waiting to see what direction it takes as the first real active trading week of the year begins, everybody back from their vacation. We are seeing yen strength again. We were on the opposite side of this trade. So this is one of our, I think, 2 losses that we had last week on the intermediate term account was this one. We were trying to trade it up. I didn't wait for it to hit the stop loss. I simply closed out the trade, and good thing I did, because it then continued on even lower. So right now we're waiting to see if this is a definitive break we should be trading, or if it does pop back up to test the levels of resistance right above it. So very active pair to be monitoring as the week begins. USD below in the higher visible portion of the chart. We traded this one down quite successfully. We're not in it any longer as it started bouncing up. Wherever we were trading this one, we got out. but I will be eagerly looking at this one as well to see what the opportunities are. I'm always a little bit cautious when it does make a new low because there's every opportunity for it to do a significant after moving that far down. So this is not one of those I'll be jumping in just because it broke out until I see a confirmation of that. But so far, I'm still bearish on the USD CAD and will likely continue being so until events prove otherwise. Give us a hit prior low, and then very quickly bounce back. These levels of support tend to be very strong. The Swiss obviously uncertainty, and well, that's what we saw here. This is another one where we took not as much profit as I would have liked, but we did take some profit on this one on its way down. Right now, both this one and the USD CAD, I'm waiting to see what opportunities it will give us. The dollar, it crested and started heading down. I think we traded this one at some point, not sure in what direction, but anyway, another one. All these dollar pairs, of course, are going to be high on radar as the year begins. In particular, I've been bearish on the Aussie for quite a while, and with good reason, and cautiously bullish on the dollar. So this is one that I wouldn't mind trading all the way back to the bottom. And the same thing goes for the Kiwi dollar. We traded the Kiwi dollar up. That breakout was simply unavoidable. We had to trade it. It made some nice profit there. It's now turning around. We'll see if that turnaround holds and we can trade it back to, in fact, we're already in it, trying to trade it back down to support and at profit. So we caught it pretty close to the top, but I'm very cautious on all of these, just waiting for a confirmation before all is said and done. Aussie Canadian also break back down towards the bottom on both Australian weakness and Canadian strength. I forget if we're in this one. If we're not, we're probably going to get into it. Again, trying to trade it down to the bottommost levels of support. It is looking good for a turnaround at this point. And again, always beginning of the week, I want to see how the market opens and then trade accordingly. Euro Swiss, we're in this one. I think we're carrying more than 100 pips right now, a chunk of that protected. It has yet to break the bottom, but we can see that it's headed in that direction. So we'll be looking for opportunities to continue riding it, but also to maybe increase our position size if we see a break of that bottom. I continue being very bearish on the euro, and of course the Swiss is going to be a safe haven whenever there is uncertainty or weakness out of the eurozone, out of the US. Euro pound taken out of the re-entry trade on this one as it started heading down again. You can see that candle, 4 candles back. That one took us out of a trade. That's our second of 2 losing trades that we had last week on the intermediate term account. Again, we are carrying a nice chunk of open profit, so it really didn't hurt us, but it did fake us out when it broke support, and now it does seem to be heading back up. I will be looking at all the pound pairs for trading opportunities as the year begins, because again, I'm bearish, extremely the pound. It's probably the currency I'm most bearish on, so I will be trading into pound weakness. But at the same time, let's not forget that the euro is also weakening for many, many different reasons. So this one might be one of the more sluggish of the pound pairs. Euro this one, I think we are, and if we are, we're at profit. I know we are in a couple of yen trades trading into yen strength. So we're still waiting on a break of support there. And this would be another candidate. If we're not in it, of course, we're going to get into it. But if we are, we're probably going to start doubling up on some of these and just increasing the position size to make money that much quicker. You can see, however, that this one very neatly bounced off the trend line and the underlying support level, as well as the Ichimoku cloud. So until I see a good break, I'm probably not going to be adding to the position, but I'm perfectly happy to continue riding it. Euro Canadian, very to the bottom of the chart. This is another one where we took some nice profit. I forget if we're still in it or not, but it is getting very near that bottom. I'm bullish on the CAD, bearish on the euro. So this is obviously one I want to continue trading, especially if it gives us a new low, breaking that bottom it made back in September. We're in it. We're at profit. I think it's a re-entry after we took profit on the earlier drop. We're carrying, I forget, 20-something pips after already taking hundreds of pips off the earlier move, and it is trying to break that that support. Obviously, what I'm looking for here is a complete trip to the bottom, which I think is very likely given that the yen is a safe haven, weakening at least through Brexit, whether it happens at the end of this month or later. So this is one of those pairs that I'm fully in love with and willing to risk enough capital to make it worth our while. So this may be one of the bigger movers if everything pans out. As I said, we're already in it. We already took a chunk of profit and we're already at profit again. I think this is definitely one of our open trades on the intermediate. So we had the trend line break, and given the uncertainty in Australia with their natural disasters, plus the fact that the yen is strengthening anyway, I think this one has a pretty good likelihood of touching bottom again at some point in the very near future. Between two different trades as it made its way down. That retrace last week took us out. I had been moving the stop loss to protect open profits, so we took another 200 pips there. It's very close to the bottom of the chart. I'm always cautious when that happens. Those tend to be major areas of both support and turnaround. So even though I'm still bearish on the euro, I'll be very cautious re-entering this one. I'd have to see a significant move before I jump. Pound Canadian, we're in on long-term account at profit after taking that profit off the euro New Zealand. We segued into this one. We caught it very near its most recent top 3 candles ago, and we're carrying that open profit as it's already making its way through the Ichimoku cloud. And again, with the pound pairs, I really think there's a good opportunity to ride them all the way back to their previous low. Which is around the 158 area. It's more than 1,000 pips above that right now. It's just a brilliant opportunity for a long-term trade. Pound Swiss, same thing. It is traveling through the Ichimoku cloud. It's broken the trend line. It's tested the trend line, broken it again. And we are in this trade as well and carrying a nice chunk of open profit too. And my hope in all of these pound pairs is, again, that we will have a trip to the bottom of the chart, giving us a really, really nice boost and a good start of the calendar year, as well as a good ending to my fiscal year. So everything just is lining up. That's it for the charts. A little bit of notes, and take these with a grain of salt. I really haven't done a deep dive into the charts, looking at the weeklies and the monthlies. I will probably for next week's session. But for now, of course, I continue very bearish on the pound. I think great opportunities there for us to trade and make very quick profit. The dollar pairs, the dollar is still looking for direction, and obviously global events at this point will be key. It's going to be moving strictly based on fundamentals. The geopolitical stuff, the attack on Iran, Iran's probable counterattack on us, on Saudi Arabia, on Israel. All of these will tend to move the dollar. We also have the Trump impeachment thing moving along. That's probably going to die in the Senate. That's pretty much what they're telegraphing, but it will still add uncertainty to the market. We've got our job reports coming out on Friday, which will give us a pretty good idea of what December looked like. All in all, it's going to be moving strictly based on the fundamentals. So keep an eye on those. The charts may be a little bit tricky until the dollar settles down. Canada, the Canadian dollar, it is starting the year strong, probably being buoyed by the oil spike, thanks to the geopolitical events. But regardless, the Canadian dollar seems to be moving back into strength, and we will be continuing to take trades in that direction. The yen has finally turned around, and mainly because it is benefiting from the uncertainty in the rest of the world as the year begins. That may end at any moment if that uncertainty goes away, but for now, the yen is definitely picking up speed again, and we'll be looking for opportunities in that regard. And last but not least, the euro pairs. The euro is still being thoroughly pummeled by pretty much every other currency out there. The probably the one exception being the pound, which both of them are weakening pretty much at the same pace, so it hasn't moved as much. But still, the euro is almost across the board a pretty good short. And covers it. A few words here in conclusion. It was a fantastic month. I'm very grateful to how December turned out. But I always ask people, how did you do? It's a tongue-in-cheek question. I did great. Why? It's not because I'm smarter or better than anyone else. It's because I'm always here. Some of you have been with me for more than a year now. You know that I show up every single week, every single day. There are no guarantees that any specific day is going to be a 500 pip day or anything ridiculous like that. But there are some days out there. Every year, there's a few days that if you miss them, you just definitely miss the opportunity to move your account significantly. So always show up. That's the message as we start the year, is you have to be consistent in your trading. We went through a very sluggish sideways market right before December. And in particular, one person emailed me and said, man, I've never seen such a sluggish market. Well, that probably means you haven't been trading for long, because these markets get sluggish all the time. The really active times in the market are a week here and there. And those few weeks probably represent 90% of the profit for the year in your account. So if you miss one or two of these weeks, that's it. You didn't have any profit to show for the year. And that is very sad. Some traders can't deal with boredom. They either go off and do something else and they miss the opportunities, or they start trading just for the sake of trading, which is another very easy way to lose a good chunk of money. You cannot force the market to move. If you try to force the market will end up taking your money. So don't do that. Show up, have a system, do things consistently, and believe me, because I've been there, done that, you will make money. You don't have to copy everything I do. I don't take every single opportunity. I can't. I have to sleep at some point. So there's a lot of stuff that I can't take that you guys can, so long as you have a system and you reliably follow it. And showing up is half the battle won. Show up every day, show up every week, and I guarantee you're going to have a good experience with the market, any market, not just the Forex market. That's going to be it for me as this first session of the year winds down. Do I have any comments or questions from anyone? Okay, then thank you so much for joining me today. I'm really happy to be back in the saddle, and I look forward to seeing you guys in our next sessions. Thank you very much, and have a good one.